Hi guys, and welcome to my favorite time of the week because it's a time when I get to talk directly to you and vice versa. So I love this. But there's a lot that's going on. And most people think that, the US, we're so strong and after all, we're the world's reserve currency and we're the best country in the world. We've got the US exceptional, blah, blah, blah. But what if I were to tell you that status has been eroding really since 2000, because that was the first time that the Federal Reserve actually had to buy our government debt, right? That's something that a third world country does, not an advanced economy. And, they were very quiet about it because that was not a good thing until 2008 hit. Then all of a sudden it magically became a good thing, as did inflation. Now I hope you realize I'm being completely facetious about it, but there's been a downward spiral in the US that's been happening for quite some time. And that's really my point. So what happened last week? The last rating agency to rate the U.S. debt at a AAA, so the highest rating, which if you're like the foundation of the global economy, that's kind of what you need to be, right? And so what happened? Well, they downgraded it. Now that's the third. The other two I'll show you were Fitch and S&P. S&P did it first in 2011. Can we have the slides up, please? Thank you. That they did that back in 2011, and then Fitch cut the rating in 2023, and now Moody's cut the rating. So really, how does that impact you? Why should you even care about it after all? Isn't the U.S. Treasury market the largest and most liquid in the universe? And there's no alternative? Because that's what they want you to believe. But we've been watching not just this erosion, but that shift, that financial shift in power elsewhere. And it's not done yet. This is going to take us into a hyperinflationary event. But guess what? If we're not AAA rated, then that means that even if the Federal Reserve lowers some rates, the world is increasing the interest rates that the U.S. has to pay on the debts. Now, I've been watching the markets since this announcement, and even though they've gone down a little bit and spot gold has gone up more than the markets went down, the markets are not really reacting to this yet, but it's going to impact everybody. So what we're looking at here is the debt, and that's where we were in 1971. And then here's where we were in 2007. Now you might notice those gray bars, those long gray lines, that is the official recession. And you might notice that every single time we hit one of those gray bars, an official recession, the speed of the debt started going up faster and faster and faster. So now it's really parabolic. Oh, this can go on for another 10 or 20 years, don't you think? That would be a no. Because all of this debt, the goal with the government is never, ever to pay the debt off. Because if they actually paid the debt off, that would take dollars out of the system. So the whole system, and you can see it right here on this debt chart, is about constantly compounding and rolling over that debt. The problem is the interest on that debt has exploded. So here we are in 2024. Now, back in 2009, just after the great financial crisis, I asked myself, well, if we've only been running at that point, we were running deficits at about $1 trillion. That was the first time we ran $1 trillion deficit, but we were servicing 13 trillion in debt. So you can think about it like your credit card. And I said to myself, but wait a minute, if we've only borrowed $1 trillion more, pretty much than what we've been spending, how come we're servicing 13 trillion at that time. Now it's 36 trillion, but 13 trillion in debt. It's because they weren't paying. The income that the government was generating was not enough to pay all the interest on the debt. So it'd be like if you had a credit card and you were not paying all the interest. What happens to that excess interest? It goes into the principal, and now you are compounding interest. You are paying interest on top of interest on top of interest. That is actually what's happened. Now, the whole world, guess what? They're thinking that debts and deficits matter again. So with everything that's happening, our allies are turning away from us. What you're looking at here is the debt to GDP. And again, GDP, gross domestic product, is all the money that flows through the system. So what everybody buys, right? And what do you see? All of that money printing that happened particularly in 2020, well, that increased our debt to GDP on an exponential level. But back in 1971, we were at 35.63% debt to GDP. Now, GDP also encompasses inflation. So none of this is really real, but even their manipulated figures. In 2007, we were at 62.72%. So that would be like if you borrowed your home, the money for your home and your student loans and your car loans and your credit card loans and all of that. If that were 62.72% of all of your income was eaten up in your debt, right? But where are we today? We see that huge spike up in 2020. Now we are 121.85%, and that interest is compounding constantly. And that debt now needs to be rolled over. A lot of that, it's been rolled over, but even more of it needs to be rolled over into a higher interest rate environment. And our allies, those countries that were buying our debt, because remember, it's the Treasury debt that underpins the global financial system, right? Well, they're turning away from that debt. And with the decline, the last one, we've got to be paying attention to interest rates, because foreign governments had already been turning away from U.S. debt. Now, the U.S. government is going to have to pay more, even more, to get other countries to buy our debt. We have no longer do we have any level of pristine rating. So like I said, apparently the debts and deficits are mattering again. Of course they are. And this is at a time when we have to issue a whole bunch more debt. And what I want to point out, because this is just a new chart from a new Treasury report on, oops, didn't mean to do that. I thought I put an arrow in there. I guess I didn't. But you can see that black line and how that's going down. Those are official buyers of our debt. And that's going down. But what's also happening at the same time, and this is why, even though that started back in 2007, 2008 in the great financial crisis, private investors were buying up Treasury debt. So that hid the decline in the official sector. And they do that a lot, meaning governments do that a lot, where they transfer the buyers. That's been happening here in the U.S. It used to be the banks up until the great financial crisis. The bank's task, the commercial bank's task, was to make a market in those treasuries. But I've shown you before in the volatility charts how that was handed over to traders. Well, banks, those that are tasked with maintaining this, and governments are long-term holders. Traders are not long-term holders. They're just looking for a little bit of pickup in income. That's all. And on top of this, that safe haven status, which is critical for investment in the U.S. and in the Treasury market, that's going away. I've been showing you that recently, particularly. And Treasuries face that twin problem of a recession because of consumers. Our job is to support the global economy. Yeah, they're having trouble with that. Watch some of the work. And inflation. So the U.S. dollar and the U.S. debt has lost, I think it's already lost, the safe haven status. But this is not something that happened overnight. None of this is. It just becomes apparent to the public overnight. And this is really a very critical point to make, because when do you want to be prepared for things, right? You want to wait? You think you can wait till 1 second before the public becomes aware of it? That's the beauty of understanding how to read the technical language of the markets. I got into the gold and silver in 2002 after my formulas confirmed that this was the end of this currency's life cycle, this great big experiment. But quite honestly, Shearson was my alma mater, so I was paying very close attention to what happened in 2008. And it was in 2007 that I got a signal. I didn't know what it meant, what happened. And if you want me to do it, just let Josh know, and I'm happy to go over that again. But what happened in 2007, and I'm pretty sure the specific date was July 9th. I could be off, but it was July of 2007 anyway, when the U.S. dollar fell to the all-time low against its trade-weighted basket. That was a very big deal. But did it look like it? No. That particular weekend, we were having what we called our sibling weekend, because I'm the youngest of 7, so I have a big family. And so a bunch of us sisters and brothers were going to my brother. He used to have a second home in Vancouver, and we went there. And usually I didn't talk to my family about this stuff because they just thought I was cuckoo anyway. I'm sure a lot of you have experienced that yourselves. And, because we were all there at the same time, I said, look, this just happened. I'm really nervous about it. I think something very nasty this way comes. But the response was, oh, you're just doom and gloom. This is the best the economy has ever been. Right, wrong. And when I went home, I told my mom, I said, Mom, I really think that you need to move to cash. Now, she had gold and silver already, but I said, I think you need to move your portfolio to cash for a minute because I don't like what I'm seeing. But she could do whatever she wants. She had her head. You can do whatever you want. I never tell you what to do. I only tell you what I'm doing for myself. And so she didn't do that. And then it was February, and she's like, Lynn, would you look at my statement? I think there's really something wrong with it. And so her portfolio was down about 20%. And I looked at it, I said, no, Mom, it's right. It's accurate. It's what's happening in the markets. So my point is that the time to get prepared is today while we still have the choice. And this is why you hear me say all the time, I don't care how early I am. I'd rather be, I don't care, 2 weeks, 2 years, 10 years, 20 years. I'd rather be early than even 1 second too late, because we are in a much worse position today than we were back in 2008. There is so much more derivative garbage, betting, risk-taking with your money, by the way, because once you make that deposit into the bank, you've loaned the bank your money. It's not yours anymore, but there's a lot more leverage, which means debt upon debt upon debt upon debt stacked on top of this itty-bitty piece of leverage. Do you remember in 2008, anybody going to jail? Why? Because it's all a contract. And it really is just this simple. If you don't hold it, you don't own it. And so there was a mission, and I remember this in the 80s when I first became a stockbroker. All the talk was about globalization, and now we're in deglobalization. But even more importantly, assets in-house. I, as a stockbroker, and all the other brokers out there, we're tasked with encouraging our clients to hold their assets at the firm in street name. I'm going to repeat that. You might want to write this down and ask your broker. Is your wealth held in street name? Because if it is, and it probably is, then that gives them permission to use your equity for their benefit. It's not a very good place to be when we are this precarious. And you know, it's a crash. We haven't had the melt up in the stock market yet, but we will. So can we see the slides again, please? So look, we've got big names that are talking about upside for gold and inflation. Of course, you're going to see upside for gold in terms of this as you see inflation, which destroys this, right? Whether you realize it or not, what this whole system and what inflation does is it creates nominal confusion. So of course there's upside for gold because it's the only financial asset that runs no counterparty risk. And I can say the same thing is true for silver as long as you hold it. ETFs are not gold and silver. They're not. You only own a share in a trust. You have no access to the underlying gold. But I want you to keep in mind where we are in this trend cycle. And the fact that we have seen Moody's, now the last credit rating agency, to downgrade U.S. debt. It was a big deal in 2011. It was a big deal in 2023. It is a very big deal today, and it's all about the debts and deficits. Isn't that interesting? So now I'm going to take some questions. And by the way, Zang Enterprises, if you don't have your sound money strategy in place, get it done. What are you waiting for? Today, we can position you into anything that we need to. I mean, not everything that I had available back in 2002, but we still have a variety because the strategy is built on layers and you need that variety depending upon what you need to accomplish. But just get it done because, I mean, honestly, booty, hooty, Rudy, Moody, I'm sitting with physical gold and silver that I can convert into any currency in the world, instantly and have purchasing power. You can't do that with dollars. All right, so now I'm going to take questions. And Theodora asks, hi, Lynette, first question of the day. If everything is going to be tokenized, oh yeah, baby, I got to do some updates on that too. And we purchase income producing assets like real estate, how would we get paid if we are not in the system? Look, everybody's going to be in the system, but do you have to hold 100% in the system? At this point, I think not. And if you join me in creating this sound money movement locally and globally, then we will retain that choice. If our payment goes into tokenized or the digital system, then we are going to have very few choices. But you'll get paid, so you'll get paid in whatever the current currency is, but you don't want to tokenize those assets. You want those real hard assets, those dynastic wealth assets. The ownership of them should be outside of the system. The income can be tokenized because it's going to be our tool of barter, but the asset itself, don't tokenize it. And also, if everything is going to be tokenized, including real estate, why would we want to invest in it? Can you elaborate, please? And by the way, I just want to remind everybody, my goal is to translate financial noise into understandable language so that you can make educated choices that puts your best interest first. So if I answer a question and it's not crystal clear to you, please let Josh know and give me an opportunity to explain it in a different way, because it's really so important that you understand any of this. And by the way, I do go over all of this with our strategy specialists. We have meetings and everything. And so you can give us a call and talk to any of them, and they can walk you through any presentation that you see at your pace so that you do understand it. That's really, really important. So everything will be tokenized if we allow it. And that's what we have to do. We have to stand up and say no. That's what we have to do. How do you do that? Here you go. If we can get enough people to convert their garbage fiat into sound money, then I believe we have a shot at having a seat at the table. And what that means is that we can inspire the composition of that new currency. And if I'm the one that's sitting at the table, or I have a level of influence over people that are sitting at the table, there will be a component of redeemable. Please, people, please take my word on this. Must be redeemable gold in the system. Doesn't have to be on a one-to-one basis. 40% gold in the monetary system, and you don't like what they're doing, you walk in with this, and even if it's 40%, you'll walk out with this. That is how we, the public, must take our power back. We had it before. We had it before 1933. We can have it again. Full circle moment, but only if we come together in community and we demand it, because there's a lot more of us than there are of them. So that's how you do it. That's how you do it. You just say no. You buy hard assets that are outside of the system, and you do not agree to tokenize them. And if enough people do that, we'll have our choices. And this is critically important for the future generations. Not so important, for me. I mean, I'm old and I have enough. And I'll be honest with you, I'm not even really all that worried about my children. Although it takes one generation to create wealth and one generation to destroy it, but hopefully I've educated them enough. And by the way, both two of my grandchildren want to participate when they're off this summer. So you'll be meeting them and you'll be seeing what's going on. And as I educate them, maybe that's something that you could share with any kids as well. So Stephen Brewster asked, has Lynette bought or made a manual washing machine for her bug out location? I have not made or bought one because I am on full solar there. So I have spent quite a bit of time and money in making that completely off grid. So no, my washing machine runs on electricity and I don't have to depend on anybody for that. I have a huge battery bank. And I know Josh has not been up to the bug out yet, but we'll be doing videos on that so you can see it. And I have done some in the past as well as when we were putting in these systems. So nope, I don't need to do it manually. But if I do, I'm set up for a community of 40, so somebody can wash them by hand. It probably won't be me, but somebody can. And John Bethia asks, tokenization is no more real than unicorns, only if we accept them as being of value. Thank you. Very well said, John, and very, very true. So don't agree to it, right? That's why you've heard me say for many years now that Bitcoin and cryptocurrencies, that is a Trojan horse. It's to bring in all of these other things. And how do they make that happen? They let people feel like they're making a lot of this from it. So thank you, John. Very well said. And Pandemonium asks, hi, Lynette. In France, Moody's postponed its grade. They know that if they downgrade the U.S., we are AA3, it will trigger a debt crisis. Yeah, because EU pension, thank you for bringing this up, Pandemonium, because EU pension funds can't buy or continue to have bonds below that AAA rating. And that's true of a lot of pension funds. So they have to get rid of treasuries. Who's going to buy them, right? The public, they'll go into ETFs or mutual funds or something like that. Somebody's got to absorb it, or the Fed. The Fed can reinstitute their bond buying program. Thank you very much for bringing that up, because you're 100% right. And we haven't seen the impact of that yet. But stay tuned, because I was watching so closely. Okay, what was happening with the markets over the weekend? What was happening on Monday? Did they go down? Yeah, they went down a little bit. Did gold go up? Spot gold go up? Yeah, it went up a little bit. And I love today, because I was listening to the Elon Musk interview that they did with Bloomberg over at the summit in the Middle East. And, it was really interesting. I tried to record it, but I missed it. So I'll see if I can find it. But the reporter was asking Elon about the drop in sales of the Tesla and blah, blah, blah. And what Elon brought up, which I thought was really interesting, that really was not important. What was important was what's happening with the stock, because the stock market is showing the true valuation. And his stock is worth, or Tesla's stock is worth over $1 trillion. Really? Really? Do you believe, and I want you to think about this, do you believe, when you look at what Wall Street wants you to believe, that this is a true valuation in any of the markets? Maybe it was 40 years ago or 70 years ago. Maybe it was more accurate to tell you what was really happening. But once everything was financialized, forget it. That's all about trading. You want traders? You think traders give a crap about true valuation? No. And wait until they tokenize everything, right? That makes it even easier to trade all of these hard assets. So going back to the first question, the answer is no, don't agree to tokenize your assets. They're going to entice you to do it. And if you are mostly in the system and we hit, well, it'll be way worse than what happened in 2008. There are going to be a lot of people that are forced to tokenize their wealth. I'm sitting here telling you, get that sound money strategy in place. It is built in layers. There is a level of cash that's in there as your first line of defense, along with barterable silver, barterable gold. These are fractional pieces that I'm showing you. Depending upon what you need to do to pay your property taxes, to sustain your standard of living, it's built in layers. So that way, when this next crisis hits, it's not going to it's going to impact everybody. I'm not going to say you're not going to be impacted. Yeah, the whole world is changing. Everybody's going to be impacted. But if the government or the central bank says you got to jump, you don't have to say, how high? You can say, nope, not jumping. Oh, I probably shouldn't have done that. Well, it's just friends. So I'm not perfect, but that's when you don't care enough to give the very best anyway. And Tony Alexio asks, are there any stimulus updates? Not yet, but they're coming. They're coming, I promise. But what is that? What is the stimulus? What that's doing is just creating more inflation. That's all it is. It's garbage. It's a lie. It's a lie. And how many times can you be lied to when you do not know the truth? And Stephen Brewster asks, do you think Keir Starmer agreed to EU deal only due to upcoming economic collapse? That answer would be yes, because a politician, like a central banker, their job is to lie, because they need to keep you calm and they need to keep you in the system. So the answer is yes, because the crisis has already started to unfold. This is not something that lies in our future. This is actually something we're already walking through. And while I know governments, politicians do not understand money. They do not understand sound money, certainly. They don't. In the sound money movement that I'm part of, we're putting together different educational materials so that we can teach about what really is money at the grade school, high school, college, and political level too. So it's all about education. And stay tuned. I mean, We are running as fast as we can, aren't we, Josh? He's nodding his head. Yeah, I wish there were another, I don't know, maybe 78 hours in each day. That would be lovely. I don't know if we could live through it, but it'd be lovely. So yes, the politicians know we're already in crisis. It's just not visible to the public, so they're going to get into position. And Fred Lamond asks, hello, what are we heading into? Chaos and total collapse? We are heading into a hyperinflationary depression because you cannot solve a too much debt problem with even more debt. And that debt bubble has already been popped. Can we connect this laptop so I can show these guys something? Oh, we're going to try. Sometimes it doesn't work, but we'll give it a shot. Excuse me. Let me grab this. Okay. Okay, I'm going to put this down more. I'm going to close this out. Goodbye. Close out. Doesn't want to cooperate. There you go. And I'm going to close this out too, because what I want to do, oh, well, that's kind of handy. Okay. I have all of these. And by the way, all the strategy specialists have the key links that I like to use all the time. If you want them, we're very happy to share. So just give us a call and they can send you these. But what I'm going to go to begin with is, oh, come on, here we go, come on. Hello. Here we go. It's taking a minute to wake up. But it's that important that if I don't figure this out, I'm going to show it to you the next time. Oh, no, here it goes. Okay. Okay, if we could put that up on the screen, that would be great. This is the Federal Reserve. Okay, I will copy this. I don't know if I can. Okay, I know how to do it. Wait, I'm sorry to take this long. Oops. I got to put it on a PowerPoint so you guys can see it. But this is the effective Fed funds rate. And so this is what the government sees. I guess I'll do this one. And let me go to,
It must be how the computer is projecting, because I don't see anything that you're even pulling up.
You don't? And I'm in PowerPoint now.
So you have to do the...
What do I have to do?
You have to press the plate on the... Oh, you're in it.
Yeah, I'm in it, so it should be up. Is it, but it's not up?
There we go.
Oh, okay. Well, sometimes it takes a minute. Oops, won't let me do that. I gotta end it first. And then I've gotta just do a new slide. Okay, there we go. Now, come on. Okay, it's going on. And bear with me. This is what happens when you go live. Okay, so what you're looking at here is the Fed funds effective rate. This is the overnight rate that the Federal Reserve controls directly. And you can see here starting in, in the 80s when we were close to, well, this is end of day, 20%. We've had 44 years of a downward trend. How do you know something is a downward trend? You see a series of lower and lower highs. Can you see that? Okay, but what do we also see? Here's my laser pointer. What do we also see is we were anchored at zero. There's your zero interest rate policy. They tried to raise the rates, but they couldn't do it. And then it went back to ZIRP, zero interest rate policy, until 2022, when the inflation became apparent to everybody, right? Then the Fed has to raise the rates. What that did was that popped the debt bubble. That genie ain't going back in the bottle again. So the debt bubble is already popped. Up until 2022, I was still waiting for that. Not waiting for it anymore. It's happened. The fact that you might not know it is not relevant to the fact that there it is. There is your hard evidence. This is a huge, big deal. So what are we heading into? There's only one way to fight the deflation. The market's imploding, which is easy for them to fight, by printing money and nominally pushing it up. And what do I mean by nominally? Look, the more dollars that are in the system, those dollars have to go someplace. Traders have access to it. They can borrow it cheaper than the government can borrow money, actually, which is ridiculous, but they can, because taxpayers are obligated to pay the interest on the debt. So there you go. I mean, that is proof positive. If I could only show you one chart to prove to you that that debt bubble is already popped, this would be the chart. And it is the chart that I'm showing you. So hyperinflationary depression, because what they're trying to do is keep everything up so that you don't know that anything has gone wrong. And that way, when we go into that hyperinflationary depression, your wealth is held in the system and they just inflate it away and transfer your wealth. Yeah, not okay with me. I'm not going to shut. I'm just going to put it down like that. And XX asks, gold price is a price of contract. You always underline, but how come we buy real physical metal just for this price when it is real, not necessary fundamental? Well, that's true in the spot gold market. So that would be true for this, which is my one piece of bullion that I have, an American Eagle, and this, my raw Liberty, which is pre-33, but all it is, it's an ounce of gold, same gold content weight. These two pieces at this time are guided by that spot market. In the U.S., most of the transactions are done with those contracts. It's not about taking physical possession. But we've seen a shift in that this year with, I don't know who it was, somebody taking massive possession of physical metal that came from the Bank of England, sending over the holdings that they hold for other governments, the gold that they hold for other governments, and then sending it out for delivery. The impact of that lies ahead, right? Just because you can't see it now doesn't mean it's not going to happen. What happens when those countries repatriate that gold? So I need you to understand that in this country, most of the transactions are just the contract, just the trade. Now, in this market, this is the collectible market. It is a physical only market. I show you those charts all the time, PCGS 3000, ultra rarities, and that's where you can see more. Well, that's a supply and demand market, period. Whereas in the spot market, that at this point governs these, that's a trading market. So there's two different markets, and you have to look at both of them. You can't just look at the contract and see that. However, at some point as we move through this trend, and we're already actually, it's not at some point, we are already seeing that move in gold, because gold, everybody is now recognizing that this is the only true flight to safety asset. Why? Because it's the only financial asset that runs no counterparty risk. I'm holding it. I own it. I don't have to worry about what Josh does or anybody else. I don't have to worry about what anybody else does because this is not a contract. That's also why it doesn't have to pay you interest, because there's no risk involved when you hold it. So these things at the time are guided by the spot market, but depending upon the supply and demand on here, you can see anything you want in the spot market. What you will also see is in the physical market, the premiums expand as the demand expands. That's not obvious if all you're doing is looking at the spot market. So you have to dig a little bit deeper. It becomes what's really happening becomes more obvious in the collectible market, because that is a true supply and demand market. Still, all of them severely undervalued, because a rising gold price is an indication of a failing currency and a looming crisis. And if you need more than that, let Josh know. And I don't want anybody to hesitate with that, honestly, because if you didn't understand something or you have a question, at least 100 or 200 or 500 people that are watching have that same question. So there's no such thing as a stupid question. If you don't understand, it's because I haven't done my job well. So give me the opportunity to do a good job for you, because you're who I work for. And Linda Little asks, interested in what to prepare in bug out location. Do you help Canadians at Zang Enterprises? Well, we try and help the whole world, and we are working on some different things. We do work with a lot of Canadians, but to prepare in a bug out location, what do you need? You need food, water, energy, security, barterability, wealth preservation. You need a community. It takes a village, and you need shelter. And in that food bucket, I always put medicinals as well, because these are the things that we need to sustain a reasonable standard of living. So I can tell you that in my bug out location, I am prepared to support a community of 40 people. And in my list of people that are going to the bug out, I have gardeners and farmers, I have plumbers, I have doctors, I have teachers, I have carpenters, I have electricians. So, yeah, I have car people that can keep the equipment going, right? Because it takes a village. I can't do, it's so funny. People will come on to my property here and they'll go, oh my gosh, Lynette, when do you have time to do all of this gardening? Because I do produce about 85% of all the food that I consume. And I've been working on this since, frankly, 2008 when the system died. That's when I started farming. And then in 2020, after that, that's when I got my bug out. Look, I work. I work all the time. I work 7 days a week. I enjoy going out there sitting, and I love to weed because I pretend that crabgrass are central banks. And so when I had the time to do it, I'd see how many I could get in a string. But of course, what do? They hide under the ground and then they pop up, right? But I have a community around me to help me with that mantra. And somebody asked me the other day, well, how did you develop that mantra? And we're going to do a piece on that because Josh also had that question. And, I knew from my studies of currencies and currency life cycles how that impacts the public. And that's how I developed the mantra. The first thing that I knew was that I had to be able to create food. And I was really getting ready to retire. And I was in a little 2-bedroom condo where, God, I was so tired of those $50 dings because I put a plant in a planter outside my door. You'll never get me to live inside of a what do they call that? The homeowners association. Yeah, that won't happen. I don't need any $50 dings because I'm trying to grow something. But I was, I could lock it and off I go. Then 2008 happened and I went, holy crap, I got to feed my family. I've got to take care of my family. So I bought this property. It's in dead central Phoenix. It's a half an acre, and there's a house and a pool and, well, pond now, and stuff on it. But I said, where do I feel most vulnerable? You know, I'd been accumulating gold and silver since 2002 in earnest, right? So where I felt very vulnerable was food. I was not a gardener. I was not a farmer, but I knew that I had to learn. So I did. And, you know, and then how did you do this? Well, I stepped back. I did enough to get that started, right? And then I stepped back and I said, where do I feel vulnerable? And that security came up next for me because I had a back door and my house is old, right? And those doors were kind of flimsy, I'm not going to lie. And anybody could have walked in and just boom, and they're in my house. So that was the next thing that I did was I put a security door on the back door because that's where I felt vulnerable. And then I stepped back and I said, okay, where do I feel the most vulnerable now? That's how I developed the strategy was how do you eat an elephant? One bite at a time, right? So how I built the strategy was one vulnerability at a time. And then just understanding what happens for people as we go through these transitions, because there's over 4,800 instances for me to look at to see what happens. And if something's happened 100% of the time, then I'm going to do something about that. I'm going to believe that this time is not different because it typically isn't, even though they always want you to think it's different. It's never different. And that's how you get to be in the right place at the right time with the right asset. Because you're not, like, I don't get fooled by the garbage. I read their stuff. Read their stuff. They tell you. They tell you. And you remember your mom telling you, when somebody tells you who they are, believe them? Because my mom told me that. I told my children that. I'm telling you that. If you read their documentation, they will tell you what they have in mind. You can determine by looking at their behavior whether what they're saying is true or a lie. That goes back to my dad, you know, and it was just our little banter, but it was preparing me, and I didn't realize it at the time. But he always said to me, do what I say and not as I do. And I used to say to him, Daddy, that makes no sense to me. For me, that's integrity. I say what I do and I do what I say. That's it. And anybody, lots of people have come on the farm and they can see the mantra actually in place. And it is up in the bug out location too. So. And that's my bug out. And Linda, we're going to be doing a lot more on that. I wish I could clone Mimi and Josh and myself. We're working on it. We're working on it because I know how important it is for you guys to understand it. And however we can help, please let us know, because even though we're not publishing videos, we are making a lot of videos. We're getting ready. Right? And we are going to be sitting down. We have a strategy session scheduled to give us a date. So just have patience. I consider myself patiently impatient. I want it done now. I want it done a year ago. But we all only have so much bandwidth, and it takes a lot of work to put a company together. But we're doing it. And Stephen Brewster says, my local jeweler scraped a tiny piece off a bit of gold jewelry once to test it. Are they just stealing a little and could test a different way? Well, he probably had a stone, which I don't think I have it here, but I think we have it at the office. We did a video on there, and no, it's such a minor amount. And what they do is they scrape a little bit, and then there's like this acid test. And not only does it tell you whether or not it's gold, but it'll tell you the purity level, the carat weight. Most gold jewelry is 14 karat in this country, which is 58% pure. 18 karat is 75% pure. And then obviously 24 karat is 100% pure. Super, super soft. 22 karat, which is a lot of what Indian jewelry is made out of. And it's gorgeous, super, super soft. So, no, I don't think that they were just stealing a little bit. Having said that, though, if you get a ring sized and they have to take a piece out of it, ask for that back. Okay? If they take a piece out and you don't ask for it back, well, then, yeah, they're going to keep it. Same thing with dentists. You know, if you have gold in your tooth and you don't ask for it back, they're keeping it. And macaw chairs.
Wait, let's back up, because that's crazy you're talking about that. Wolf in the comments is asking about gold caps. If it's being replaced, he says, is there any value to it?
Yeah. I actually have. What did I do with it? I'll look and I'll bring it's kind of gross. But yes, there is value because it's gold. And gold and silver in any form is monetary at its base. And after my mom died and I was going through her stuff, I found this little envelope, and in it was a tooth with gold filling, because that's what they used to use a long time ago, was gold fillings. And yeah, she kept it. I kept it. If you don't ask for it, the dentist is going to keep it. So yeah, because gold is indestructible and it can be melted down and converted into, into anything else. This can be cut up. It can be melted down and turned into this. So yes, gold caps, gold fillings, pieces of gold, like there used to be like a garden here to make this ring smaller, and it was gold. Yeah, I have it, even though I had it. So yes, the answer is 100%. Value. Mm-hmm. And if you could write this down, because I forgot my pad. I mean, do you guys want to see that gross gold tooth? Because
I personally want to see it.
Do?
Yeah.
All right, I'll see.
That's
It's either in the safe deposit box, which is where I really hold most of my gold, or I might have it someplace else. So I'll look. And even this, right? This is a $1 gold back. It's got 1,000th of an ounce of gold embedded in the middle of this. Okay? That's the piece. Gold can be hammered into little thin wafers or little pieces, right? It has that property. So yeah, gold in any form, silver in any form, monetary at its base. It's also why you see me wear so much jewelry, because I want to make that point. Much bigger markup on this than on this. This is about a 300%. This is not. But yeah, any form. And hello from Macau. Hi. Ooh, Macau. Nice. My credit card starts limit to me to purchase precious metals from Royal Mint several months ago. I'm not really sure exactly what you mean by that, but yeah, you should be buying gold. So that's awesome.
I think you're saying that the credit card company is somehow limiting them in purchasing precious metals.
Well, that's not good.
From the Royal Mint.
Oh, thank you. Okay, well that could be it. So Macau cheers, and I should go to Macau. That would be very interesting. Starts to limit me. Well, wire the funds, right? Or there are places where you can buy cash. We don't take cash because of all of the reporting and the visibility of it. But there are lots of different ways that you can buy precious metals. And if your credit card company is limiting you, don't use credit card. And plus, when you use a credit card, people don't realize this, but that's why they want to turn everything into digital, because then what you're doing is going through the banking system, and the banks take a percentage of every single transaction. That's not okay with me. Personally, I happen to use a lot of cash, because especially if it's a local business, I prefer to give them the most that I possibly can. I'm a locavore. That means I support local. Wherever I go, I like to support local. So, yeah. Low blood pressure asks Lynette, why are you worried about treasuries? Treasury Secretary said downgrade doesn't matter. There is this bridge in Brooklyn. I don't really own it, but I could sell it to you. Yeah, why worry? Doesn't matter. More debt. More and more. Thank you, low blood pressure. That's funny. Treasury Secretary Besson. Yeah. Sean Lensing Feingold, is it just the U.S. bond market that is starting to erode confidence, or other countries starting to see their yields increase like Japan's? Is this just a prelude to a complete debt collapse? 100%. The system is built on constantly compounding debt. But whenever you have debt anywhere in the world, you either have to service it, you have to pay it off, or you need to roll it over, or you're going to default on it. Advanced economies default on their debt this way. They just print the money to pay it off, which is why you will see Treasury Secretary Besson say, we will never default on our loans. Well, let's see. You guys know somewhere in here is a $10 trillion Zimbabwe note, but it has no purchasing power value. Well, that's what's happening with the dollar. You know, officially there's 3 cents left. It's probably less than that. The only thing that's holding it together is confidence. So yeah, this is absolutely a complete global debt collapse. And I just showed you what popped that bubble. Got gold? I mean, seriously. And John Bethia asks, I believe that countries buy our debt only because if they don't, it will hurt their own economies. What do you think? And I would agree with that. And I tried to show you recently in a video that I did, I don't remember which one, but what we have here is this major doom loop, because the dollar as the world reserve currency created a made-up market for dollars and for dollar-denominated debt. Because what that means is if you are a country or a corporation, and you certainly know if you travel internationally, that you have to use the local currency to buy stuff now. But as the world reserve currency, you were forced to use dollars for transactions. First for oil, but it's true for lumber, medicine, everything. And so governments and corporations too were forced to hold dollars. And the treasury, the 10-year treasury, is the foundation of the global financial system. But really, since 2013, I've shown you this before, that our 2 key buyers of our treasury debt, Japan and China, have actually been buying less and liquidating some. And that has sped up. And that's where I just showed you that other chart where it's hidden from view because the private sector has moved in and been buying the debt. So, but the private sector is not a long-term holder. So that becomes a real problem. And the world is turning away from treasuries, which is the support for the global financial market. So when we get these downgrades, that means that fewer entities are going to want to buy our debt. And as Pandemonium pointed out earlier, a lot of the mutual funds, a lot of the pension plans that can only hold AAA rated debt, they're going to have to be liquidating those treasuries. It does matter. It matters a lot. But how many times can you be lied to when you do not know the truth? So, yeah, they have been, but they're turning away from us. And that is creating this doom loop, and it will not end well, especially for us here in the U.S., because we're dependent on dollars. And that's why on a global basis, you better own gold and silver. And that's been a movement that's been growing. And there ain't no fever like gold fever. And the more that this debt is recognized and the problem that we're having is recognized and people lose confidence and feel unsure, the more they will turn toward gold and silver. So the next question is, Quota Video Productions. What's your take on digital assets and cryptos in the next 6 to 12 months? Well, they need you in it and they need your eyes in it. So, and there are entities that are making a lot of money and controlling the crypto markets. I would anticipate, and remember I said earlier, we have not witnessed the melt up phase yet, right? But when things go up, people pay attention to them and then they want them. It's that FOMO. So I would say that over the next 6 to 12 months, we're going to see a lot of volatility and so a lot of back and forth, but we haven't seen melt up yet. And I think that that's what we're going to see in the digital assets and the cryptos because they need your adoption. When they make this transition, they need things to seem as normal as possible. The more people that are into cryptocurrencies and the digital assets, the more adoption they get. So I would think that you would see them go up in terms of this, but you're also going to see the purchasing power of this go down substantially. And the way that you're going to know it is in your cost of living, is in inflation. So don't be fooled by nominal confusion. They knew that. It is an easy way for governments to transfer your wealth without you realizing it. And Christian Roman asks, how are you going to sell gold when cash is gone? I'm going to sell it and buy it with whatever the currency happens to be. And that's why it makes it so critically important for us to all participate in the sound money movement. Because what can I do? I'm one person. And honestly, the only difference between me and you is that I've been studying this stuff my whole life because you need somebody that understands it. And the universe picked me. And the only promise that I give is I will show up and I will do the work. That's the only control that I actually have. So, we will work within the system, but if we can come together and on a global basis and buy gold and silver, we can demand that gold and silver be part of our next monetary system. This creates restrictions around what governments and central banks can do. This ensures your freedom and it gives you your power back. Because back in the day, you did not like what the government was doing. You could walk in with this and you could walk out with this. And that meant that the government could create less debt if you did that. So that was the power that we had over the governments and the central bank. I now understand, watching what's happening and living through this the way I have, unfortunately or fortunately, depending upon your perspective, I now understand how the system, how those in power got away with it, because we aren't paying attention. And when they were creating this dollar system, I read this, they actually said that if through inflation people have to work harder and more to sustain their standard of living, they will have less time to pay attention to what we're doing. Bleep, bleep, bleep. That's how I feel about that. That's not going to matter. You're going to be able to convert it and then convert it. And Guyon Varag, I'm sorry if I'm butchering your name, Serge, I'm sorry. Is it possible that gold will not be allowed to be purchased for private aid purpose and only states will be able to trade with it? Yeah, anything is possible. That's why personally, I don't buy monetary gold. You're looking, and of course you'll see me wear my travel bracelet that has some, I think, 10th or 20th ounces, no, not 20th, probably 10th or quarter ounces on it. That's why I don't buy bullion, because this is classified as monetary gold. I can hold this in an IRA. That's where most people in the U.S. hold gold. I like it in my possession, but most people hold it in an IRA. How do you know what kind of gold to have? I want the classification that's the guys that write the rules or have the ability, because they're so darn wealthy, to influence those that write the rules. I personally only do collectible gold. That's my wealth insurance. I only do this because it is less likely to be confiscated. I can't guarantee that. I can't guarantee that they will or will not do an overt confiscation. But if you don't think inflation is a confiscation, if you don't think taxation is a confiscation, if you don't think the setup with the banks and the bail-in is a confiscation, think again. They just use different words so you don't realize it. Yeah. You just hold the kind of gold, like my Uncle Al did, pre-33 gold coins, when it was illegal to hold more than 5 ounces of gold any other way. He was sitting on at least 3,000 of these, at least. Thank you, Uncle Al, for that extraordinarily valuable lesson. And J.P. Haynes asks, my stockbroker, of course he is indicating to stay in the market, and those who don't can lose in the long term. What is your take on this? You know, I was a stockbroker, so I understand the training. And my take on this is he has no flipping clue about currencies or currency life cycle. So I strongly encourage you to ask this question. And if he can't answer it, I'm going to give you the answer too. If he can't answer it in that way, run. Don't walk. Why are you listening to somebody that has no flipping clue about what's going on? Ask him, can you tell me how money is created and supported in this system? He's dealing with your money. Do you think he should know that? What's the answer? Full faith and credit of the government. Have you not heard that? 1,000,000 times they say that, right? Let's translate that. As long as you trust them, so you have that confidence, you have that faith, you will continue to loan them money. Your work, your efforts, so they can create this and you're willing to work for this. That's how money is currently created in this system. We'll see what the new one is. They've talked about that just being by transactions, right? And look at that confidence piece. You could also ask them, what does it mean that the consumer confidence and consumer sentiment is dropping to historic levels? How does that impact this? I tell you, I show you, I give you links. Ask them if they've ever gone on the Fred. Take them on the Fred. Show them the purchasing power chart, right? Federal Reserve Education Department. Don't take my word for it. And what does it mean that there's a zero that we're pretty darn close to? What does that mean? If they can't answer that question, why are you listening to them? They know nothing. Nothing. Used to be one. I haven't done this in a while, but boy, do I enjoy it when I do. When I was working with clients and they would have a stockbroker or a financial advisor or somebody like that, and they would say, oh, gold, blah, blah, blah. You know, and they would give them a runaround so that they didn't really, the client didn't really understand what they were saying. They would get so confused that and a confused mind does nothing, right? And that's the goal. So I would say to them, look, if you want me to, I will talk to your stockbroker with you on the line because I want you to hear the whole conversation. That was one of my favorite things to do because I understood what they were saying and I understood the runaround because of where I lived my life. And invariably, they would be like, oh, it's a very fun thing to do. Why are you listening to them? They don't know anything. They don't. They're not trained in that way because they're just trained to sell what they're told to sell. They're taught how to sell an intangible product, the sizzle, not the steak. Give me the steak. Give me the steak. And Stephen Brewster asks, stocks and shares that compounds, i.e. reinvest profits, are they worth it if fiat currency collapse? Nope. And White Cobra 67 Shelby, ooh, that is a Mustang. I almost got one of those, actually. I digress a little bit. But I went to college at the same time that I was going to high school, so I needed a vehicle. And so my father took me out one day, and oh my goodness, the first car that we saw that I fell in love with was a little candy apple green, so it had all the sparkly paint on it, and it was a Corvette convertible, I think 1964, something like that. Flipping gorgeous, gorgeous car, and this would have been in 1971. So it was an older car, but it wasn't that old. It was $2,500. I loved it. I could get anything from my father. He was such a pushover. But I said, oh, Daddy, can I have this? Can I have this? And he said, well, we'll have to ask your mother. What did my mom said? She'll kill herself, Bill. So I didn't get that car. So we go out looking again, and I found it was white with a black racing stripe Shelby Cobra Mustang. It was a gorgeous, gorgeous car. Daddy, I love that. Can I have that? $2,500. And he goes, we're going to have to ask your mom. And what did my mom say? She'll kill herself, Bill. So I didn't get that either. And then they're like, well, let's go look for a car. I said, why bother? You're not going to get any of the cars that I want. You can go pick it out. They picked out this all black Chevy Impala. It was a convertible. It was a boat. It had the wings on the back. I mean, today I could appreciate that car. But as a 16, 17-year-old, I hated that car. It was a flippin' boat. But the best part about it, this was in Kingston, New York. We got lots and lots of snow, was that because it was all black, it absorbed the sun. So in the winter, it would be flippin' freezing when I would get out of class. But I'd get in my car and it was toasty warm. And by the way, the gas pedal stuck on that car. That was more dangerous than the other two cars. But there you go. Sorry, that's a little, the Shelby Cobra kind of took me back there. And actually, I was there at the Barrett-Jackson auction when they sold the Shelby Cobra that was the first one to go over $1 million. You would have thought the roof was blowing up off of that stadium. It's pretty interesting. Okay, anyway, I was wondering, by the way, do you have a Shelby Cobra or do you just love them? I'm curious. I was wondering, even if we have gold and silver, are we still in their system when we convert to the new system? They will see what we are using our money for. We're going to be living in both worlds, but you have to give me a little bit of grace so that I can monitor the evolution, and hopefully it doesn't come to that. But we're really, just like we are now, we're kind of working in both systems. So if you're going to, I just recorded this full circle moment in Turkey. That's going to go out, Saturday? The one that we just did on Turkey, that we recorded on Turkey? Yeah. Mm-hmm. That's go out Saturday? Okay. You totally want to watch this. I'm so excited about it because it gives you a great example of one little piece of the strategy, which is buying gold and silver when they're undervalued and then converting it into other assets when they are undervalued. Overvalued now, they'll get to be undervalued. So we're kind of operating in two systems, and that's the way it will continue. If you are going to, as example, buy a piece of real estate, which could be an income producing asset, or it could be a place for you to live, right? If you buy it from a corporation, most likely you're going to have to convert this into these, or whatever the system is, in order to conclude that transaction. If you already have a piece of real estate and you want to pay off the mortgage, you're going to have to convert this into these to pay off that mortgage. However, if you are working with an individual, when it's time to do that, you will definitely be recognizing the fact that this stuff has no value and is continuing to lose value very, very rapidly. There's your hyperinflationary depression. So if you're buying it from an individual, they might want these, but chances are they're going to prefer this because what's happening in the currency is really, really obvious. So what I anticipate seeing is that we'll be working with both systems, just like we are right now and just like we have been. So I don't view that as an issue at all, frankly. And, this is from one of Riley's clients. Here's my question to Lynette Zang. If gold goes to $50,000 and silver goes to $2,000, and since houses are currently $300,000, wouldn't real estate prices increase as well upon overnight revaluation? No, actually they go down. Also, I have heard about lopping off 2 zeros. They can lop off 3 zeros. They can lop off 10 zeros, which would make gold equal to 500 per ounce and silver would be 20 per ounce. Would 2 digits be topped off of real estate so it would be worth $3,000? You know what? That's a very convoluted but very great question. Next week, I think I can do that for this week. If you'd like, let Josh know. Just like when somebody raised a question on tokenization, it was so important that I do that. And I think on top of what we just did, that maybe doing a gold and silver or gold and real estate video again and what happens with those overnight resets historically might be a good one. Andrew, okay, that's a different one. So, okay, what happens is stock markets, when they do those overnight revaluations, and I'll do a video on this and I will get very specific, so make sure I have that question specifically so I can just address everything in that. I'll do a video on that for next week if you want it. Just let Josh know, and if you don't want it, then you can see the old video, but quite honestly, I think I could do a much better job on it now. So I will do that. But this is what happens, right? So everything inflates up. Remember, I said we have not had the melt up yet. That still lies in our future. But we will get that melt up where you could see a loaf of bread at $80,000. And then boom, they lop off 4 zeros. So what happens for stock markets, what happens for, and I'll do it with all these different markets, what happens with stock markets and real estate markets and all of that, they lop off those zeros, and any money you have in the bank, say you had $1,000 in the bank, you wake up in the morning, you have $1, and all those zeros are lopped off. So that loaf of bread now looks like it's $8 versus $80,000. So it kind of looks a little bit better. Gold has a tendency to remain higher because of that flight to safety for roughly 9 months-ish. Okay, I can't guarantee how long it's going to be, but historically, you got about a 9-month window before that too will reset. and I'm going to show you all of this. But once that reset, so in that window, I'm going to tell you right now, even though there are globally on average about 3 resets per event, not right in a row. You'll have a little bit of time goes and then another reset and then a little bit of time and another reset as gold and silver move toward their fundamental value, right? So when they do that first reset, bam, we're going to be paying off any fixed rate debt. I'm not going to wait 9 months. Why play with it, right? That's why in preparing, I'd rather be early than late because I can't dictate when that price drops down. And I just want to get that debt paid off, bam. Same exact strategy that the government uses with repaying debt with dollars or whatever, wherever you are, whatever that currency is, paying off debt with a currency that has zero value. But that's also when we see, and you're going to see this because I pulled a chart from the Central Bank of Turkey where they were doing this report on real estate, right? You're going to see that repeatable pattern. What we're looking for is accumulation. So that's when the smart money recognizes a severely undervalued circumstance and quietly begins to accumulate. Usually by the time the public gets involved, it's not the right timing of it. So have some patience. But are you guys saying that you want me to do a video on that? Okay, then so shall it be. And I'll talk about, I need to have this little piece in here so I can make sure to address every single thing that I'm talking about.
I sent it to you, so we're all set.
Awesome. Good job. And Andrew Gonzalez asks, where do you think tokenization will happen? On crypto networks? I hate to tell you this, but tokenization is already happening in the banking system with your deposits. It's already happening. Yes, it will also happen in the crypto networks, but the Bank for International Settlements, and this just came out, I think, although it may have been the report that I recently read from the Biz, so give me a second because I just heard about this piece today, the Bank for International Settlements coming out with how tokenization, give me a break. I mean, if I could, no, I can't say that. Okay? But how tokenization would make it so much easier for central banks to manage the markets. Oh my God. So give me a second because that may be the report that I just read on the piece that I did on tokenization, or they didn't really talk about central bankers in that piece. So this could be a new piece on tokenization. It's already happening and it's throughout the banking system. And it's all the usual players, Blackstone, JP Morgan. If you didn't watch that video, go back and watch it. It's already happening, whether we like it or not. And then bam, that's how it is. Like it or lump it. You better get out of the flippin' system, at least with enough diversification in your wealth that if I'm right, you're protected. And if I'm wrong, you're still protected. What if I'm right? What if I'm wrong? If you can do something that really doesn't matter, rock and roll hoochie coo. That's the place you want to be. An Eldon Elder asks, if you are like me and don't even have a cell phone, how does one participate in the tokenized digital system? Well, you're doing it with your deposits, right? The cell phone, what the cell phone does is it positions most people, especially the younger generation that's more used to it, they carry all their wealth right on their phone, and then they are nudged into spending it. But if you don't have a cell phone, that's not a bad thing. You are not going to be nudged into spending your equity. And also you're probably, you're an elder. I'm an elder, right? I'm not married to my cell phone. So I think they were waiting for us to die off. That didn't happen. So we've got to lead the fight. You know, Eldon, that's you and I. We got to lead the fight. We've had the experience. If you were alive in 71, and if you're an elder, I'm thinking you probably were, and you remember the chaos and the inflation and the markets implosion and all that stuff that happened, and look around. It's the same level of energy. It's the same kind of stuff that's happening. So I do not have a computer and a landline. I have gold, silver, and platinum. You're in the best possible place you can be. Of course, you also need to have food, water, energy, security, community, and shelter. You got to have all of those so you can maintain a reasonable standard of living, because no matter what, we're all going to be impacted by this. An extreme pacifist asked, how can the $37 trillion public debt and the $1 trillion annual interest through selling U.S. treasuries continues as China and other countries stop buying them? Ta-da! The Federal Reserve can buy them. They just print money and buy it. And that's what sends us, well, it's the loss of confidence that triggers the hyperinflation. As long as the public has confidence in this stuff, then even though we're going to experience high inflation, the hyperinflation will happen when people go, no, I don't trust this anymore. That's when we'll see the hyperinflation. It'll be visible to the public. It's already happening. It's just not yet visible to the public. Just like when I was in Vancouver in July of 2007, and I'm like, something nasty this way comes. It wasn't visible I was watching it unfold in different circumstances, but it wasn't visible to the public until September 2008. Doesn't mean nothing happened. It just means the public wasn't aware. So it can't continue. They'll just monetize the debt. It's just hyperinflate the debt away. And Pirate Dude asks, what is the risk of the government confiscating gold again? Except that there is historic precedence in this country that's happened count them three times. To me, that's historic precedence. The last time was 33. That's one form of confiscation. But look at the purchasing power chart. Inflation confiscates your work and wealth. It just does it more invisibly than them knocking on your door and say, give me your gold. So I believe personally that, they've robbed you of all of your wealth and your work and your time and everything, your entire life. It's hard for me to imagine at the very end that they go, yeah, we got enough of your wealth. You can keep this bullion gold. Maybe, but probably not. This is something that is in a different classification. The IRS classifies this as a collectible. You cannot hold it in an IRA. You can hold all you want of this in an IRA because this is classified as monetary gold. Easy to manipulate, right? Because they can control the spot market. And this is the way I think it'll look, right? Let's just say that spot is trading at $5,000 an ounce when they decide to do an overt gold confiscation. They don't want you to realize what's happening. So just like they did in 33 and they paid a little bit of premium, they would say to you, look, it's your patriotic duty. We have to do this to maintain our power in this country. So we're going to confiscate your gold. But because we're so fabulous, forget that. We're so fabulous that we're going to give you 6,000 of these. Well, most people believing Wall Street, though don't ask me why, because all they do is lie. But believing Wall Street would go, wow, gold is only worth 5,000. They're willing to pay me 6,000. Okay, that's all right with me. Look at how much of this I just made. And then just like they did after 33, when they get as much gold as they think they can get, you will have that overnight revaluation. So if I own this, it's still so far below the true fundamental value. It doesn't matter to me because this is a different classification. So I'm going to get to keep this. And like my Uncle Al, I'm going to get to use it to execute my strategy. If you're holding bullion, and I've had a lot of people say this to me, well, I just won't turn it in. Okay, they're not going to come knocking door to door. In the U.S., most people don't hold any gold. Maybe they have a wedding band or something like that, but they're not sitting with these coins. They're not going door to door. It's not worth it. But for me, executing a strategy, I can't use this in the normal marketplace to convert it into income-producing assets because, like before 71, I might be limited to 5 ounces and that won't cut it, right? This I can use in the normal marketplace. This is black market. If it's black market, you're not going to get full value for it. So, if I hold this, it's what if I'm right and what if I'm wrong. It really doesn't matter. What is the best way to own stock? If you are going to own stock, and I don't even know, I'd have to double check and see if you could do this, but you actually want to hold the certificates. Now, they used to ship you directly the certificates, but most of that, I know that they were working on getting rid of that ability, like with bonds. There used to be coupon bonds, and you would hold the certificate, clip the coupon, send it in, then you would get the interest payment on it, but the banks couldn't use that equity that you had in that bond or in that stock certificate for their benefit. So that's what I said. In the 80s, there was this huge push to bring assets in-house. And as a stockbroker, I was encouraged to do that because I would get so much every month for whatever assets I held in-house, right? And that's how they do that. They encourage you based on the commissions that they pay or the extra that they pay you so that they nudge you into doing what they want. Now, the other option, if you can't get the gold certificate, you might want to see if the company that you're buying, a specific company that you're buying their stock in, can hold it in your name there. If they can, then also that's not held in street name. But again, I haven't really looked at this just recently. I know you can no longer do that with bonds. You can no longer take possession of the certificates, so the banks get all of that money, of your money, to equity, I should say, rather, to use as collateral for them to borrow. Most of that is still true with stocks. But the best way to own a stock is if somehow you can take possession of it either through the company that you're buying their stock from or in your physical possession, because then those banks cannot use that equity. And James Burnett asked, can gold-backed notes be confiscated by the government? Government can take anything they want. They can walk in here right now and take all of my food and all of my vehicles and all of that. The laws are on the books for it. It's whether or not they're likely to do it. And I would consider the gold backs. I don't know what I did with, here it is. The premium is huge on this. Doesn't mean I don't see a place for it in the strategy in your first line, part of your first line of defense. But this could be classified as a collectible because there's so little gold in it, and yet the cost is so high. So governments can confiscate anything, but the easiest thing for them to confiscate is this. Okay, so I don't think that they would bother to confiscate this. because it's more of a collectible or it could be classified. And I don't think you cannot hold this in an IRA. The way to determine what you're going to buy is if you can hold it in an IRA, and I'm just referring to gold, not silver. But the way that I do it, if I can hold it in an IRA, I'm not buying it. I want that collectible classification. It's a level of protection. And White Cobra 67 Shelby asks, why do you think 100% they will revalue the currencies in gold? Because that's what they've done 4,800 times without exception. And if you look across, you can see Zimbabwe was doing what historically has been done. And also, that's the way currencies are revalued. So if you look at a chart, and you will, because we're redoing this bill, and I don't see it handy right now, but if you look at the purchasing power value of the currency, it's going down like that at the same time that the spot market is going up like that. So the reality is that it's constantly being reset against gold because this is sound money. This is fiat money. They're both forms of money. They're just the flip side of it. So it's just how it's done. And that's why I am 100 bazillion% certain. Because when they do that revaluation, they take something that has no intrinsic value. It's used in one place. And they revalue it against gold as the primary currency metal. Why do you think central banks buy it? It is the primary currency metal. And they do that revaluation. This is all intrinsic value. And I say that because it's used in every single sector of the global economy. So it's used in food, it's used in jewelry, it's used in the financial system, it's used in space travel, it's used in medicine, it's used in manufacturing, it's used in electronics, on and on and on and on and on. So no intrinsic value, all intrinsic value, and that's how the revaluation has been done every single time, no exception. And by the way, have you noticed those exchange charts that I pull up, and I'll take a currency and I'll pull up that currency against the dollar. Then I'll pull up that currency same time frame against spot silver. And then I'll pull up that same currency same time frame against spot gold, right? So it's easy to see there how the currencies always get revalued the highest quality against gold. Primary currency metal, fiat currency. And Delana Lands asks, in 2008, in the great financial crisis, when gold got pulled down with the market, what happened to the premium? Ooh, let's see if I can find this easily. Otherwise, hold that question and I will actually show you what happened between spot gold, gold mining stocks, and the physical markets, because I created this chart at the time, okay? So this is what happened. Yeah, the spot market does drop because most of the stocks are bought with debt on margin. And so when the stocks go down, then they get what's called a margin call, meaning that if you've borrowed to buy these stocks, you got to come up with money. And if you don't come up with more money immediately, they will sell off your portfolio or parts of your portfolio to cover that margin cost, which then can snowball because they're selling it off. That pushes the price down. Then they have to sell more to meet those margin calls. So in 2008, yep, spot market dumped, gold mining stocks dumped, and this stuff went to their then trend high. So this went up in a flight to safety move, and the premium on this exploded, regardless of what happened with the spot market. So I will show you that next week. Do not let me forget. And I'll pull that up and have it set up so that you can see it. Okay. Yep. So there is a chart that you can see what happens. And by the way, do I have this available to the strategy specialist? I don't think that I do, but I can do that. So you can call us, right? Just give us a call, talk to your strategy specialist. I will make sure that that chart is available to them by tomorrow. Give me a minute to finish today, and then I'll get it set up. So if you don't want to wait until next week to see it, just give us a call. We'll be happy to send it out to you. We will be happy to do a FaceTime call and walk you through it. I'll make sure they understand it and they can explain it to you. And Christian Roman asks, although are you questioning whether that's Christian Roman? Because there are 2 question marks before it.
You told me if there was a question in question.
Oh, yeah. Okay. All right. Well, I'm just going to read this. Hi there. Would you consider having David Webb and E.G. Griffin on your show about the tokenization and collateralization of everything by big banks? Yeah, let me see what I can do. Yeah, absolutely. In fact, in our new office, we have some of the equipment, right, for the new studio in the office. I don't know if I can get them physically, but we can do a virtual conference. So let me work on that. But in the new office, in the newsroom, which is going to be so slick, it's got a table that can seat 4. So we can do these round tables. We can have these conversations in these panels there.
It's going to be a party.
Oh my God, I'm so excited. I can't wait. We're going to end up with 6 studios by the time we're all finished? Something like that.
Yeah.
Plus the amphitheater.
It's going to be choice. Everybody come see us.
And we are not scrimping on the equipment either. We want to give you guys the best that we can possibly do. That is our job. We work for you. So let me see what I can do, Christian. So make sure that you mark that one off as well. And we'll see what we can do to put that together. And Don Brazy asks, how do you think silver will do during a recession and or depression? I have both gold and silver. Actually, silver maintains its value. Gold outperforms, and I've kind of shown you this before. And there is a graph that I have. I think I put it into the XRP presentation. For those of you that are going to XRP, make sure that you tell me that you're in my live as well. But gold and silver outperform all other fiat money assets during inflation, hyperinflation, and deflation. Period. End of discussion. That's just the historic norm. So you own both gold and silver. You are in a perfect position. But you also need the food, water, energy, security, community. Please, let's create that sound money movement, global community, and shelter as well. So great job, Don. And John Bethia asks, I am 78 and grew very poor. We used objects as barter. Do you think that the youth of today know how to barter today? There's actually a very strong barter movement, which when I was doing Thrivers, I actually talked a lot about that and would go in and see it. So the answer is yes. I do think, and I think people will learn very, very quickly how to barter. And the difference between, say, toilet paper as a tool of barter and silver as a tool of barter is if you want something from me and I don't need toilet paper, I'm not going to barter with you. But silver is universally barterable, right? If it's strawberries or eggs, they have a shelf life. This does not have a shelf life. So I do think absolutely that people are going to learn very quickly how to barter. And I also know that there has been a huge integration in barter around the world, especially in places that are experiencing high or hyperinflation. That's the way people are surviving, and I think we'll learn how to do that as well. And Ren Pixie asks, I'm stacking and gathering. When the revaluation happens, will the value go up enough so I can afford to drill a water well, estimated $50,000? Yep, you will. Because you're going to have purchasing power when nobody else does, or just the few of us that are gathering it does. And so you're going to be able to actually hire that equipment and that person when nobody else will. So yes, you will. No problem. And Pandemonium asks, why do real estate seems to be the catalyst or the trigger of our modern economic crisis? The 2008 crisis started with real estate, and thanks to you, we know that it's popping again. Well, the reason is because real estate on a global basis is where a lot of people accumulate most of their wealth. Look at China. China's a great example of that. And so when that bubble pops, that's where people carry their wealth. That's a big part. In the U.S., about 30% of the GDP is in real estate or real estate related. Like you're going to fix up your house. So that's places like Home Depot, which I'm not a fan of because they don't really give a crap about you. But it generates a lot of income. And that's true in China. It's even a higher percentage. So that's why real estate will trigger those crises. And that's what happened in 2008. It was the derivatives. So it wasn't the real estate. It was making leverage choices. And it's on steroids now. The level of leverage on real estate is so much higher. I mean, Lehman was a 30% leverage rate. Right? We're way higher than that now because they never solved those structural problems that caused the crisis to begin with. They doubled down on it. And it's like, if you can think of it like an iceberg, all we ever see is the itty bitty tip until the whole thing explodes. So it's kind of like we're on the Titanic and we're dancing and we're partying and we're having a great time like it's 99. But we've already hit that iceberg, and I say that because the debt bubble is already popped, and the bets on the debts, which who's talking about that? Who cares? It's a big deal. That's got to be triggered, but since the guys that create the derivatives also can declare when there's a default in them, that's really hidden. What's really happening in there, we can't see, and we don't see it until they're overwhelmed and losing control. And I'm talking about the big banks, Blackstone, JP Morgan, all these guys. We'll see it, but yeah, real estate is just a huge part of all the money that flows through the global economy, and that's why. But it's all those bets on top of it. It's not the real estate. It's not the real estate itself. It's how leveraged it is. How leveraged, how much debt and exponential debt is on top of it. Full of Hope asks, are they wrapping student delinquent debts into bonds, 401ks? Well, they've been doing that. It's called securitization, where they take this debt and they turn it into a financial instrument, which tokenization is going to take that to steroid level. And then they sell that garbage to pension plans, to mutual funds, ETFs, and all of that. So they're already doing that. I don't think we've seen the fallout yet. That still lies in our future. But we will, and it's not too far off. Connor McCarthy asks, you mentioned in a video last week that the government is borrowing from Social Security with serious consequences, and that we should have a dedicated video diving deeper. Yeah, I can probably do that as well. So pull that, because I typically do, 3 pieces in a week. So, yeah, you're right. Okay, Connor, I'll do that for you, 100%. And just make sure that it's copied over, because, you guys, I'm sorry, but all right, I'll admit to you, I have CRS. I'm sure a lot of you also suffer from that. Do you know what CRS is? Can't remember shit. So Delana Lands asks, if when they revalue gold, how does that impact the bond market? Well, the bond market is already popped. And so the debt markets, when they do that revaluation, it basically hyperinflates away all value. It's done. It's a big crisis. And then they cram down whatever else they're going to do to you, the new system, but they have to get adoption and they don't change their behavior. That's why you see Venezuela and Zimbabwe in their 6th iteration of new money, right? They don't change behavior. They just change the currency. So the revaluation means that they are paying off all of those bonds with dollars that have absolutely no value. And Teaspoon P asks, Lynette, can you explain what the differences are for pre-33 and what you would use the different designations for? Uncirculated, circulated, etc. Yes, I can. It's all part of the strategy. And like I said, it's all in layers. So the first thing that we have to do is secure your standard of living. And we do that with a combination of fractional silver and fractional gold, right? And it depends on what you're trying to accomplish, whether you're going to do that with silver or you're going to do it with gold. So as example, this is what I'm taking to the store to buy a pint of strawberries. Actually, I'm growing them myself. But if I had to go to the grocery store, I would be using silver for that. But this is what I'm going to use to pay my property taxes, because even if my property is paid off, it's classified as immovable. I mean, you can't put it on your back and walk away with it. So even if it's paid off, you have to pay the property taxes. So we have that all broken down. So depending upon your specific standard of living, that determines how much and what kind of silver you need, and how much and what kind of barterable gold you need. Then we're also going to be looking at what fiat money assets you've managed to accumulate so far. So a 401k, an IRA, a 403b, just a regular brokerage account, your savings, whatever you have in this, we need to make sure that it is properly diversified. And for that, I would use a higher population, meaning more of these are known to exist, and a lower quality, which has nothing to do with the gold content weight. It's the level of blemish. Also, I forgot to mention this. For me, this is my emergency savings, right? So if I need to come up with cash like that, this is what I'm going to liquidate first for that. This is what I hold for my emergency savings. Okay. So we've sustained your standard of living. We've made sure that you can accommodate any emergency that comes up, and we have diversified your portfolio so that if there are assets that you can't touch or you choose not to, I'm not telling you what to do. If you choose to stay inside of the fiat money markets, that's fine. Just be or crypto markets, just be appropriately and properly diversified. Now, the next opportunity, though, that we have is income-producing assets. And so for that, you want, and it depends on whether it's stocks or it's I'm not touching bonds until we're in the whole new system, because that's the problem. And I don't know yet what they're going to use in the new system to actually justify creating whatever they're going to create, right? I don't know that yet. They've talked about debt, which means they got to burn off the debt that's there in order to create new debt. Or they've talked about transactions. So I decide to buy a boat, bam, money is created. How much value do you think that money would have? All right, I digress. So I'm going to do a weighted portfolio in a little bit higher quality than this. I want you to understand that when we put a portfolio together, we have everything that is classified in all these different areas. And so it's easy for us to pull it up. And what we are looking at is the cheapest coin in the best neighborhood, right? Because there's going to be a range. And so we can pull everything up, and when we select the coins for you, that's what we're looking for. Okay, we want to be in this range, but there might be a coin for, say, I'm just pulling numbers. Don't hold me to any of these numbers, please. But let's say that there might be a range between, I don't know, $10,000 on a coin and $5,000 on a coin or something like that, right? And we're going to look at the populations, how many are in each category. We're going to look at how many are in a higher quality level. There's lots of reasons for that, because we're putting together strings and there's all sorts of things that we're calculating, because our job on the way out is to capture the most gains for you. So, we're not just going to go by the price. We're going to look at the population, the quality, and then the overs, what's available over that. So then we position that appropriately. And then that last classification is legacy. So, for example, it is very important to me, it has always been very important to me, that I leave a lasting legacy for my children. Now, as I am converting into dynastic wealth instruments, rare collectibles, real estate, and gold, that's part of the legacy, right? But I can actually do all three of those components with different quality levels of gold. So now in the legacy, in those coins that, if I'm not here, I'm not going to have any control over it. But if I've done my job well with my children and my grandchildren, then they will understand the importance of maintaining these legacy coins, unless it gets really, 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 really bad. So these coins are going to be very, very rare. And if you go in and look at the ultra rarity chart, I'm not saying paying $15 million for a coin, but what you will see is these coins, based on that quality and that rarity, perform, how do I say this, at a different multiple level. So for every $1 move in this, right, it equates, depending upon the quality level and what we're looking for, it equates to multiple moves of this. And the way that you know that it really works is because the more rare and the fewer the blemishes, the more expensive the coins are, right? So that's actually proof positive of that. It gets more complicated. That's why you need to talk to the strategy specialist, because then you're having a one-on-one conversation. And if a question comes up for you, it's easier to address that question, right then and there. So have I done this? Because if it says MS, that's mint state, that means it's never been in circulation. So it's a higher quality level than just uncirculated or circulated. This is circulated. I don't really care about this. It's just an ounce of gold to me. That's all it is. It's pre-33, so that gives me a level of protection. but it's just an ounce of gold. So if I ran into a challenge, right, I'm going to liquidate this way before I'm going to liquidate this because I have a more strong function for this, either to convert into income producing stocks or maybe real estate or maybe rights. I will, as we get closer to that, I will do a video on all of the different options. I'm not ready to do that yet, but I promise you I will do that. And then you have to look at what your circumstances are so that you might need more passive investing. You might want more hands-on investing. So it depends on your age and your circumstances and, just like building the portfolio. It depends. That's why these portfolios are all custom. And that's why we talk about your goals and your circumstances and what you have to work with. And we lay it all out for you, right? And everything comes color-coded so that you know the use of them at a glance, right? Because how would you know the difference between this coin and another one that's in a slab? You're not going to know that. But we're going to help you understand it so that you can execute the strategy. Did I answer that? It's kind of complicated, but I'm encouraging you to call and have this conversation and do your own strategy. You're going to see it. It's going to make a whole lot more sense if you do it for yourself to your circumstances. So call us. We'll help you out. We work for you. And Tina asks, my kids tell me gold is too high, so it is better to get silver at least. Something is better than nothing. Well, I'd agree with the last part. Something is better than nothing. But this is the importance, no matter what you're doing, of understanding the true fundamental value of every asset and every instrument. Because if you don't know how much something is really worth, how do you know if something is undervalued, fairly valued, or overvalued? Therefore, do I want to buy it? Do I want to hold it? Do I want to liquidate it? So you can't go by the spot market. You can't go by the stock market. You can't go by whatever Wall Street tells you, or governments, or central banks, because their job is to lie to you and keep you in the market, making it easier to transfer your wealth. And when the markets dump, who are you going to call and complain to? What are you going to do? You're going to call up the SEC and say, I want my money back? No, you're not. So I love the fact that you're having this conversation with your children. Didn't I do a video? I bet you I can do that one better now too. I don't know if you guys have noticed, but I think our production quality since Mimi and Josh came, and they just taught me what to do, and we're still figuring it out. So it's getting better and better and better. But I think I can do anything that I did before in a much more understandable way. So if I didn't, it's going to be a list because I can't, there's only 24 hours in a day and there's only 7 days in a week. But understanding fundamental value, how do you know when real estate is overvalued? How do you know when stocks are overvalued? How do you know when dollars are overvalued? How do you know when gold is overvalued? How do you know when silver is overvalued? Is there anything else? I'll do a video on it. I think I'm maxed out for what I can do for next week, but it's important.
I know that we talked about, it's on the board to talk about the difference between intrinsic versus fundamental. And
I got to get that one done too.
So we'll get to it.
Well, we will get to it. It's just that so many things are happening that
it's an exciting time. That's what I chalk it up to.
Well, 100%, and I mean, I was groomed for this moment in time, so I don't seem as crazy to my family as I once did. And Anthony, but I'll do that. And Tina, when I do, make sure that you share. And also, what's not also a bad idea is have that conversation with you and your children and the strategy specialist, because they can explain fundamental value to you too, I think. Yeah, they could. I mean, these guys, they weren't born the day they walked through the door. They've had a lot of life experience. I'll get that done quickly, as soon as I can. As soon as I can. Lynette, Anthony asks, I don't understand what that coin is that you always hold up and wiggle around and say, this is what I'm saving. What is it exactly? And how much does one cost? Well, I use this one because it's one of my less expensive coins, frankly. I'm not going to have a legacy coin in my drawer. So this one happens to be a 1914 San Francisco mint state 63. So that means it was minted in San Francisco in the year 1914, and it is a mint state, meaning never been in circulation, and 63 is the level of blemish because it goes from 60 to 70. 70 being perfect, not one blemish, like a proof coin. Well, actually, proof is a little bit higher than 70. I think the highest that I personally own is 68, and I just have a few of those. And then 60 would have the most amount of blemishes, even though it's mint state. Because when they were creating these things, they were created to be used as money in public. So they weren't thinking about them as a collectible at that time. So they could have thrown them in a pouch. They would have stacked them, and hence the blemishes on them. But I don't know how much it costs because I don't really work with that anymore. But you could certainly call us, and the strategy specialists, I don't even want to throw out a number, because then even though I say you can't hold me to it, you'll hold me to it. And I don't know the answer to that. But I can tell you that it's definitely not the most expensive coin that I own, not by a very wide margin. This would probably be a coin that I would use to convert into dividend-paying stocks after I know who's going to survive. This is a lower quality level, and but call us and they can get you that number. I'm afraid to give it to you because I have no idea. Honestly, have no idea. And John Bethia asks, Lynette, do you know how to live off the land? Mm-hmm. Well, I don't know that I personally. To a degree, yes, I do, because I've become an urban farmer. And even in my bug out location, I don't have that planted out yet because I am looking for the right people to manage that up there. But I do have hothouses up there. I did put in a kitchen orchard and a production orchard. And I have enough long storage food, so things like rice and beans and things like that, and canned goods and oils and all that stuff to support 40 people for 6 months. So if I didn't have any of that, I like to camp. And I'm pretty resourceful. I don't know how to determine a poisonous yet. I will learn this. How to determine a poisonous mushroom from a safe mushroom, but I do know about purslane, and we are going to do some things on foraging in the city, because a lot of people are in the city. You need to know what you can eat here. Dandelion greens, purslane, things like that, mallow. Those are all edible and highly nutritious. So I cannot sit here and tell you, John, that I absolutely know how to live completely off the land. But then the next is people need to eat or use for medicines plants that our ancestors once did. It's 100% true. Morgan understands that better than I do, and we are bringing in experts in all of these areas, and the ability to forage for, to your point, John, to be able to know, oh, that's a medicinal plant. You know, I've more focused as I'm in the city, because remember, I haven't had the bug out that long, but nutritionally dense food. So most of what I eat, and food is the most important medicine that you put in your body. So doing really highly medicinal food, and you could talk to Jason, my chef, because he's learned a lot working, you know, with me, and he's been with me now more than 2 years. So no, John, I can't actually say that I know how to live off the land, but I am working very hard on having things in place so that we can all learn together. But it's a great question, because I do think everybody needs to have that knowledge base. And Woof, so this is the first time I've seen one question from you, Woof, but I know you asked one through Josh. Lynette, have you ever heard of Rodale Institute in PA? They're the pioneers in organic farming. They used to publish a magazine called Prevention. Yes, now people come from all over the world to learn. That would be another thing to write down, but I am familiar with the Prevention magazine, and I can tell you that here and also up north, we do what's called regenerative farming. So we are constantly building the soil. So we're probably doing a lot of the things that they do there, but that is a really good resource. So I see Josh is copying that, and we because we are going to do that other YouTube channel. I'd be doing it on this one, except that people stop subscribing or they unsubscribe when there's anything that isn't financial on there. When the reality is all the parts of the mantra are very financial, but that's why we have to do a different site, which it is what it is. What are we going to do? But thank you for that, and thank you for that reminder, because we do have to build that store of knowledge and those resources for everybody. So we might be able to do some things together. And Tetrafin asks, hi, Lynette, I'm new to all this. Where do I start? That is such a great question. I would really highly recommend that you call us, because a lot of the basics are put into PowerPoints that the strategy specialists can actually walk you through. You really have to understand what money is, because that's the foundation of the problem that we're having. And they can go at your pace. They have those tools for you. So I would say, where do you start? Give us a call. We're going to take you through the basics. And when you're watching these videos, the big advantage that you have right now in these questions, and I'm talking about for the community, is since you're new to this, then, you know, when I say something that you don't understand, I use a word or I do an explanation and you don't understand it, please, honestly, let me know, because whatever it is that you're questioning, lots of other people have that same question, but a lot of times people go, oh no, they're going to think I'm dumb, or I can't ask that question, or whatever. It is such an advantage to our community for you being new to it. Did I not tell you that, Josh, when you first started? You know, I said, if I say, go ahead.
No, just that if there was anything that you had gone over or explained that I didn't understand, having not been in this industry, and, you know, this is my first exposure to precious metals, that any questions I had, it's likely that someone else out there has a similar question. And to feel comfortable asking any question, whether, you know, it seems dumb to me or not, or whatever, it doesn't matter, because, you know, everyone starts with step one at some point. And so while most of our people are in it, like, there's still some people that are waking up to it. And so We're glad, we're glad they're here.
It's true. And honestly, I mean, I've been doing this on some level my entire life. That's why you hear me say I was groomed for this moment in time. And I am constantly learning. I'll come across a word that I don't understand. Okay, well, let me tell you, or a concept or something, and I'm going to dig and dig and dig and dig and dig and read and read and read and read and read until I do. But, you know, part of the challenge for me personally is that since I've been doing this my whole life, you know, things that seem like, well, sure, okay, duh, to me are a completely new concept for you. So you're in the right place because we will help you understand. And you got to start with what is money, because we're at the end of this life cycle. And if you don't really understand that money was sold to us and we need it, it has 4 key functions. It is a tool of measure so that you can put a value. Okay, this is going to be $1 and this is going to be $3 or whatever, right? So it's a tool of measure. It is a tool of barter. Okay, if I give you this, you'll give me that. It is a tool for fair payment. So the labor you create today is you are fairly paid for, and it is a long-term store of value so that no matter when you use that money, you are always being fairly paid for the original labor that you used to create that or barter for that money. When they brought this in, everybody knows that if you just hold this, it buys you less and less over time. So that means that those 4 functions became 3. Now, what they're talking about with the digital money, once we give up the rest of our power to the central banks, don't do it, don't do it, don't do it. But if we did do it, then they say, these are their words, not mine, there are no limits to how low they can push interest rates, because they're telling us that negative interest rates are a choice. Well, sure, I want to go out and work my butt off and save this crap and then loan it to you, and I'll pay you to loan it to you. That makes absolutely no sense at all. But what they're talking about is once we're fully digital, then you get paid, your paycheck, it immediately goes into a bank account that is charging you interest. So not only do you're dealing with inflation, but you're getting charged interest. The central banks have said that they will present it to you, no inflation. We can guarantee that if you give us this digital currency to manage, no more inflation. So that happens after the hyperinflation, right? But why won't there be any inflation? Because there'll be deflation. Because once they get all the purchasing power away from you, and officially there's only 3 cents left, they got to attack principal. And that's what negative rates are about. So you need to understand money first, because the digital money, okay, gold, 4 functions, does all of them. It's the only money that does that. This, 3 functions, right? 3 functions. It is not a long-term store of value. This, my depiction of Bitcoin, they make it look like gold so that you think that this is digital gold. It's not. It's not. 2 functions. That's it. What would you rather have? But call us. We will walk you through the basics, because you also need to understand who owns everything. And our strategy specialists have all of that, and they will take the time to educate you. And thank you so much for being here. And I'm glad that you asked that, but seriously, any word that I use, any concept that I present, if you don't understand it, that's on me. Okay, that's not on you. My job is to explain this in a way that you get it. But everybody learns differently, which is why I try to do it visually as well as verbally. And thanks to the quality level of our production team, I think we're getting better at it. I feel like we are anyway. And ML asks, will the confidence end when the dollar's last 3% dies, or can it go on after the last 3% is gone? This is what I think is really likely to happen. When we experience high inflation levels again, it's that inflation level that will destroy what little bit of the confidence is left, right? The big question is what happens when it gets to zero, but it's not like, do you realize that there's only 3% or 3 cents left on the original purchasing power of the dollar? No, because it's kind of hidden from you. That's the advantage for central banks and governments of inflation. So it's really when rapid inflation occurs and people see it in their day-to-day living. They go to the grocery store, they go to the gas pumps, they go to pay for an education or insurance or anything else. When that goes up really rapidly, boom, confidence can be lost overnight. And it's kind of like a collective. So this is what it is most likely to look at. And some of you may have heard this example. You're sitting in a movie theater, and all of a sudden you're watching this movie. It's dark, it's calm, everything is out there, and somebody gets up and walks out of the theater really fast. Well, okay, maybe they had to go to the bathroom, something. A couple seconds later, somebody else gets up and walks out of the theater really fast. Now you're looking over at them and you're going, maybe they ate at the same restaurant and they had some bad food. All of a sudden, 2 people get up and boom, out the theater as quick as they can get. Now you're going, what's going on? Before you know it, you've got everybody that gets up and leaves the theater. And that's the same thing that happens with confidence. And this is why I watch it like a hawk. This is also why the governments and central bankers watch it like a hawk, because it can be lost, boom, just like that. So I can't tell you what is the level of purchasing power that's going to make people recognize it, because it depends on the speed, right? Rapid inflation, less confidence. And look, the reading that just came out is the second lowest in history. And actually, as I think about it, that's really the beauty part of understanding technicals. Because if you plot that out, when it breaks that level, I didn't do this very well the last time. Let's see if I've gotten any better at it, right? But when things are suppressed, right? When they break a level of support, then they shoot in a direction. When that's negative or down, that means that it's going to go down faster. So honestly, let me see if I can pull that chart, because that would not take me very long to do. And I'll show you where the support level is. It's going to be when that support level is broken, that's going to be the ticket and the key. Write that down. I usually keep a pad here so that I'll jot notes to myself, but I forgot to put it there today. Sorry. So now Josh has to do a little more work. To pull up a long-term chart on consumer confidence and consumer sentiment. And I'm just going to do it technically. I mean, technicals are really just easy. Just grab a chart, long-term chart, and then take a ruler And it's really so simple. You just draw lines and oh, okay, there it is. Easy to see. But that's when I think, that makes the most sense. When we break that level of support, then I think that's when we're in the deepest doo-doo ever. Is that it? Are there any more questions?
There's more.
Oh, okay. Okay. Where do you stand on Bitcoin considering the upcoming conference you're attending? First of all, I will talk in front of any group that will have me because my goal is to build community. And I'm very grateful that they've invited me to XRP. It was shocking last year. It was shocking because I thought, what is a gold person going to do at a crypto conference? But hey, I'm pretty good at getting myself invited to things. And so I got invited. It's a similar kind of head for most of those, especially in the beginning, that are trying to go around the system and around the government. I'm kind of hoping now that you see that these cryptocurrencies, whether it's Bitcoin or any of them, are not outside of the system. They're right smack dab in the middle of the system. So just because I'm doing a conference, I still consider it a Trojan horse. I consider all of this stuff just about getting enough participation to make the transition into a surveillance economy easy for them. Don't make it easy. I'm not going to make it easy. I don't know if I'm going to be successful or not, but I know that if I don't make an attempt, for sure, I'm going to be losing out. So, I'm going there to build community and to be of service. I mean, that's why I'm going. And John Bethia asks, I went to mail a package at FedEx. They refused cash. Why? Because that's a great question and also should give you kind of a heads up, right? In one of my most favorite pieces that the IMF did, it was 2015, breaking below the lower zero bound. That's the name of that report. And in that report, they talk about wanting distance between the choices that they make, meaning the central banks and the government, between the choices they make and how it is introduced to the public, so that you do not know that this is policy. And they gave an example of how they could take us cashless like that without us even knowing it. And your experience, John, is one of the ways. Another one of the ways that they discussed is by, okay, you want to use cash? We're going to charge you to use cash. So the coronavirus and what happened during then, that's when cash is dirty. Do you kind of remember that conversation? Cash is dirty. Ew, who wants cash? Personally, if I know a company will not accept cash, then I take my business elsewhere. And there are actually places that will only accept cash, right? They want everything to go through the banking system. They can surveil it better, but the banks make money off of it. So what you're experiencing is a way to get rid of cash. Because if you can't use it there, and that's been dwindling down, but it's also been picking up lately. This protects your principal. It doesn't protect your purchasing power. But with these bills, especially going to negative rates, and I know you might think that I'm crazy, but I'll put my neck on the line, and I can't tell you exactly when it's going to happen, but I am personally 99.9, no, I'll go 100%, what the hey, that at some point we will have negative rates in this country because what do they do once they get all the purchasing power? They got to attack the principal. They ran that experiment. It didn't work, right? That experiment started in 2009. And it ran for 15 years, zero interest rate policy, ZIRP. You might have heard of it. But getting rid of cash, right? Well, it went from this. It's how they make the transition. It's genius. It's evil genius, but it's absolutely genius, right? They go from this, oh, how inconvenient to hold this gold, to this. Hey, anytime you want your gold, bring it into the bank. We'll give you your gold. And this, all running at the same stated purchasing power at the same time. 20 years we got used to this. 20 years. So when they took these two things away, people didn't think anything had changed. I got to bring a credit card in here. This then went into credit cards, and that started in the 50s. So the plan was always to take us cashless. This protects your principal, but it does not protect your purchasing power. So they are saying that they're not going to take cash away because then people would notice it. What they're saying is they will put a chip in the cash, and so then when we go to negative rates, when you go to use this, or you go to redeposit it, or you go to take it out of the bank, it gets charged interest. This, as it sits, would be considered cash in the wild. And those are their words, not mine, because it does not yet contain that chip. But hey, if there is no cash out there, there is no way for you to protect your principal. And tokenization is about getting you to spend your equity. So that's what that's about. They refuse cash because they don't want you. They're doing the central bank's bidding. They just want it introduced by the retail public, not by them, because then you know it's their policy. That's why. Can I say that next name? I wouldn't. 1GJ6. I think confidence in the dollar is already losing respect, not just by the American people, but worldwide. 100%. 100%. And that is a big part of the problem, right? So they're losing respect, but that's what underpins the global economy, and that's that doom loop. That's that doom loop. You better have gold and silver, let me tell you. And Jules F. asks, if China and Japan are buying our debts, what do they do with that debts? They've been reducing what they're buying plus what they're holding. That's the problem. It's in the hand of traders. So what they do with that debt is they just collect the interest on it, or they liquidate it. They're liquidating it, but they just sit on it. Traders trade it back and forth, right? Because interest rates go up, principal market value goes down, and vice versa. So more treasuries are held by traders anymore and bought by traders. Short term. Governments are longer term, but that shifted in 2013. It's already shifted. It's done. And why, I didn't finish that question. And why would they buy a loss like your $1 trillion Zimbabwe dollar? They're not. They're turning away from it. And when they buy a debt, do they pay that amount of money for it? They'll pay market value. Okay? So a lot of times, there's first run. So that's when the central bank first issues the bond, or the Treasury first issues the bond, and then there's off run. So that's the secondary market. What officials, countries, etc., typically buy are first run. And so when a bond is issued, it is typically issued at what they call par, or $1,000. And then it has the market interest on it, right? Now, once it's issued, then if interest rates go up, the market value of the bond goes down. If interest rates go down, the market value of the bond goes up, okay? This is when it was issued. The longer the duration, so there's a big problem with the 30-year bond. I just saw something this morning. I haven't pulled it up yet, but I will. So the further out you go on this chopstick, right? That's the longer the maturity. And you can see how much fluctuation happens in the bond that has a long time to mature versus something that is very short term. And so, but the problem with doing a lot of short term stuff is then you have to keep rolling it over. So, there are all sorts of strategies around it, but why would they do it? If they buy it when it's first issued, they're not buying it at a loss, right? But if they bought a bond on the secondary market and interest rates went up, they're going to buy it at a discount. So instead of $1,000, maybe they pay $950 or $900, or it kind of depends on the bond and the quality level and the maturity. But they don't automatically take a loss. It's the movement of the interest rates. And I want you to keep in mind the fact that we had all of these banks and all of these central banks that for 15 years were buying bonds at zero interest rate policy. All of those are underwater. All of those mortgages that were sold in ZIRP are all underwater. All of those fixed rate car loans are underwater. All of that debt is at a loss. But I've done some work on this. I haven't looked at it just lately. But a lot of the banks will say, oh, no, we don't have to report that loss because we're going to hold it to maturity. Because if you hold it to maturity, it matures at par. So even if it's got a loss here and you hold it for 30 years, it's going to, presuming that it will pay you out, it'll pay you out at par. So they don't have to show those losses. However, what will that dollar buy if they hold that dollar for 30 years? A whole lot less. But at least they don't have to show you their losses. Central banks and banks are completely insolvent. If there was a major run on these banks right now, they would be forced to sell those bonds way below par. It would be a big problem. Huge. This is what's hidden, as are all those bets that are written against those underwater bonds. And we can't see it. It's opaque to us. Doesn't mean that it's not going to impact us, but we're not going to see it coming. We can't. That is an opaque market. And Jules F asks if China and we did that one. And did I answer that whole thing? And when they buy a debt, do they pay that? Okay, I think I answered that. And a government would not buy the 10 trillion Zimbabwe note because that's a currency that their public has to use. Other governments, they're not buying that. And Delana Lands asks, are gold rounds also considered monetary coins? Because you can hold them inside of an IRA. So just go to the IRS website and put in what gold can I hold in my IRA, and that'll give you an indication. But yes, you can hold gold rounds in an IRA, so they are considered monetary gold. And Eldon Elder asks, there has never been a fiat currency system where the units don't eventually return to its innate value, fundamental value, you're right, of zero. Bullion is the only real money for 5,000 years. Gold, I'll take it out of bullion, and I'll just say gold in any form has been money for 5,000 years. Yep, and it will be money into the future. And the reason why I can say that is because it's the only asset that runs no counterparty risk and has the broadest base of functionality and the broadest base of demand. Boom. So thank you, Eldon, because you're absolutely right, except not bullion. Love 80s says, are gold backs legit? Yeah. There is embedded inside this. The technology is really interesting. and they're gorgeous. They are really gorgeous. And what makes them legit is the gold that's between. So that's the front and that's the back. And in between there, these are two sheets of paper that are fused together with a very, very, very thin, 1,000th of an ounce embedded in there. So yeah, they are legit. They are legit. I can see where they would fit in the first part. This would not be the only way that I held gold. Just like I can see convertible digital gold, I can see that for the first part of the strategy. But if you don't hold it, you don't own it. So I wouldn't load up on it because the premiums are way too high. But what they have to do and what they've been working on and they've been accomplishing is getting acceptance in stores so that you can use this in place of this. And honest to God, if I had to choose between the two of these and that was my only choice, I'd totally take that. Because there ain't no gold in this. At least there's gold in that. And please, Full of Hope asks Lynette Zang, please do a piece on student debt delinquency and how they are being bundled and sold. Subprime 2.0. I can do that, actually. I can do that actually pretty easy. So if you would capture that and give it to me on a list, I will happily do that for you. This is great. Lots of questions today. I love it. Star Helix asks, Lynette, which sectors in stock do you think are an exception to this rule? None. Gold mining stocks look appealing in terms of value and story. Gold mining stocks are still stocks. And I do a lot of gold mining events. And it isn't that I don't like them, but when they do a confiscation, like we've seen, particularly in a number of places in Africa, they force the miners to give up like maybe 20% or a certain percentage of whatever they pull out of the ground, and they have to sell it to the government in local currency that's being hyperinflated away. So none. And again, I'm going to bring in the chart. Maybe I'll do a little bit more on this comparison to relative performance on spot versus gold mining stocks, something like that. Let me see what I can come up with to help you see it. Because Star Helix, which sectors and stocks do I think are an exception to the rule? None. And the reason why I say that is because you can only convert them into this. And Riding High, oh, that's a pretty good name. Riding High. Lynette, do you plan to go back on George Norrie's program Coast to Coast anytime soon? Well, Chandelier kind of books my interviews, and we could put that in there. Would you let her know to give George a call? Because it's probably been a minute or two, and I will happily go back on his show. And Gina Young asks, hi, Lynette. With all the new dollars coming into the USA in the form of jobs and companies, won't that be good for all? Ultimately, the answer will be yes. You know, I remember in the 80s with all the talk of globalization and all the jobs and the manufacturing. And, you know, when I went to school, I first went to Fairleigh Dickinson in Teaneck, New Jersey, and my boyfriend's father worked in the garment district. And he took me to the garment district. I wish I still had that sheepskin coat, let me tell you. That was gorgeous. But that was a booming industry back in the early 70s. I mean, you'd see people walking with racks of clothing back and forth and all of these different manufacturers and everything. And, you know, I remember that. It was wonderful. And I also remember when they talked about shipping off the jobs overseas, so globalization, I remember thinking to myself, I can really see some problems with this. So now we're in the deglobalization process. The answer is that the reason why they did it, and especially with China, and I've really been wanting to do a piece on this, is just other more important things have come up. But, they pegged the Chinese yuan to the US dollar. And what that means is they tied them together. So if the dollar went up, so did the yuan. If the dollar went down against a bunch of other currencies, so did the yuan. And it's so easy to see it on that chart. What that did was it shipped manufacturing to China. That's why they became the manufacturers to the world, because the flipping corporations could determine what their profits were without the risk of currency exchange rates. Now, yes, ultimately that will be good for everybody, but the pain that we're going to have to experience is going to be severe. It doesn't happen overnight. It takes a lot of money and effort to build out these factories, to create those jobs. And why were there those jobs sent overseas anyway? Why? Because workers in China were and are willing to accept a whole lot less in pay than here in the U.S. It's all about corporate greed. So, and it's not all the new dollars coming into the U.S. I mean, I think that's fabulous. I never thought that complete globalization was a good thing. And, never let a good crisis go to waste. So, yes, that's going to be better on the other side if we have all of those jobs. That'll be better. But the pain, when one system goes away, another one comes up. What we need to do is take sound money and use that as a bridge to hold our purchasing power from this system into the next system. Because thousands of years, you can always convert sound money into any other money. And where I had originally thought that I would convert more of it when we went to the other side, and I'll tell you, I'll let you know when they're done, because it won't be with the first reset or the second reset. It'll be when gold is nearing its true fundamental value. And I can't tell you what that's going to be, because it's going to be based on all the new money that they're printing to try and inflate their way out of it, which, by the way, that's been the talk about the deficits. We'll just inflate our way out of it. Awesome. And I am going to have to go pretty soon. But it's going to be painful. So just be in a position where no matter what happens, you're fine. That's what the sound money strategy is about. And Stephen Brewster asks, any news on BRICS meeting later in the year? I think I heard maybe in this channel. The BRICS, but the BRICS aren't going to take over. And I'll look into it again, because everybody always thinks that they're going to back the currency with gold, and that's been a lot of the discussion. But understand that as soon as a country backs its currency really with redeemable gold, it fixes the debt where it is. They have to hyperinflate the debt away, then they can back the currency with gold. And as we've been experiencing with Zimbabwe, it's all about confidence. Because even though they said that the currency was backed 40% by gold, it was not redeemable. Nobody trusted them. So they usually meet like in the fall. So we'll stay tuned to see what's coming up. But I'm not really worried about the BRICS taking over, because they're not ready to back the currency with gold. They have to deal with the debt first. Everybody does. That's why this has to be a global reset. And that's why we have to build this global community. And by the way, you might have noticed a lot of Chinese and South Koreans and a lot of younger people buying gold in these countries. It's the way to go. You got to protect yourself. And Dave asks, hi, Lynette, how close do you think the gold-silver ratio to get in the future? You know, it's kind of hard to say. Will it go to 20 to 1 like it was? I mean, here, 20th of an ounce of gold to 1 ounce of silver. These were both worth $1. Historically, inside of where we are, so when we went on the fiat system, we have seen that get, that narrow again. It could happen, except we're not inside of the same system. We're entering a digital system. And so when I've done lots of studies on what happens to gold and silver during hyperinflation, yeah, we will see, I can't tell you what that ratio is going to be, but it's the widest I've ever seen it right now. I do expect that to become more narrow, but ultimately when we enter that hyperinflationary stage, gold severely outperforms. And the reason is because it's the primary currency metal, whereas this is almost, even though this is used in every sector of the global economy, this is more of an industrial metal. So a lot of the influence in the silver is based on a slowing global economy. So I don't know what that's going to be. I never personally really worry too much about it because I'm executing a strategy and it's not a trading strategy. It is a strategy to have the wealth transfer my way, to sustain my standard of living. I don't own, other than cash, I frankly don't own any fiat money products, so I don't need to protect them. But I'm set up to sustain my standard of living and in a position to accumulate my dynastic wealth as we go through this transition from this system into the new one. And Jacqueline asks, do you think the recent surge in physical gold deliveries and central bank purchases signals a broader rethinking of gold's role in global portfolios? 100%. Yes, I do. And I think that we have not yet even begun to see when other governments that sent their gold to the Bank of England for safekeeping and the Bank of England sent it to the U.S. for delivery. We have not seen the fireworks from that yet. But I would absolutely say that everybody is rethinking gold's role in global portfolios. Why do you think we're seeing, I mean, it's stunning, the level of gold purchases by central banks over the last 3 years. And that's not slowing down. And that actually started in 2005, that shift in the trend. That started in 2005, before the great financial crisis. So, yes, I absolutely do think so. Thank you for that question, Jacqueline. That's a great question.
Our viewers are all dropping off.
Okay. Wow. Okay. Wow, there's still, this is the most questions I think we've ever gotten. So, yay, yes, I do have to, because I do have something else I have to do, and I hate to do that because I want to answer all questions. So we'll see if we can maybe find some time to answer more of them, and we can just...
We can look through them and see if we want to hit any next time.
Okay. Okay, because I do want to answer all your questions. But this has been phenomenal, and I really appreciate all the questions. And I wish that I didn't have to go because, thank goodness I have indomitable energy. I will plot after this, I'm sure. But thank you so much for being here and this level of participation. And I hope when we get to do this in a live studio audience situation, we'll still be doing the Zoom in here. We're going to try and structure that a little bit differently. But I really hope that a lot of you can join us live. I can't wait to do that. I really can't wait to do that. So you guys, let's do this. Let's really ramp up the sound money movement. And it's easy. It's a quiet revolution. It's peaceful. All you got to do is convert this garbage, wherever you are in the world, into sound money in your possession. And until next we meet, please be safe out there. Bye-bye.